Right now, I mean, the Nasdaq is just sprinting higher on all these massive tech earnings, but crypto is completely ignoring the rally. It's stubbornly flashing these warning signs.
Yeah, it's a really strange disconnect.
Welcome to your personalized deep dive into the Vantage Plus crypto outlook published today, Monday, August 17th, 2026. We are going to unpack exactly why crypto is lagging so hard.
And we've got a lot to cover.
We do. We're also decoding a massive multi-million-dollar move by a famous Bitcoin whale and, breaking down the critical technical levels for BTC, ETH, XRP, and SOL to help you navigate the week.
The big mystery this week is really that missing tailwind. Like, tech stocks are booming, but crypto investors are just sort of sitting on their hands.
Right.
And right in the middle of this stagnation, we get this bombshell headline. Michael Saylor's company, Strategy, just offloaded 1,690 Bitcoin. That is over $108 million.
Okay, let's unpack this because they didn't just sell, right? They sold at a massive loss. I mean, their average purchase price for those coins was over 75 grand.
Yeah, the losses are definitely piling up there.
So the report says they're funding dividends and building US dollar reserves, but come on. I mean, it feels like a captain selling off pieces of the ship to pay the crew while they're underwater. Doesn't calling it strategic liquidity sound a bit like, PR spin for we're bleeding cash and had to capitulate?
Well, it's really tempting to see it that way, sure, but you have to look at the scale of what they didn't sell. Taking a loss hurts, obviously, but Strategy still holds a staggering 840,000 Bitcoin.
Oh, wow. That is a lot.
Right, so this isn't a panic fire sale.
Yeah.
CEO Fonlo made it clear that they're building a cash buffer. Like, if prices correct further, they're going to use those dollar reserves to accumulate even more.
Oh, I see.
Yeah, it's a strategic move to weather the stagnation.
Okay, but that stagnation is exactly what's making the broader market so nervous right now. Because if institutional whales are, building cash buffers, it tells you they see more downside risk.
Absolutely.
And when you look at the market leaders, like Bitcoin is hovering around $63,057 right now, and it just looks vulnerable.
It is very vulnerable. For the market to actually recover, Bitcoin has to break past that $66,000 technical resistance zone. Now, earlier this year, $66,000 was this massive support floor.
Meaning buyers always stepped in.
Exactly. But market psychology has totally flipped. Now, that floor has become a really sticky ceiling. Traders who bought at $66,000 are basically just waiting for the price to creep back up there so they can break even and sell.
Right, which just creates this constant heavy downward pressure. And it seems like Ethereum is trapped in a similar sort of psychological box.
It really is.
It's trading at $1,880, so it's stable, but the report says it's prone to profit-taking below that $1,925 resistance. I guess the silver lining is that it's holding above the $1,800 support, but it needs to break 2 grand to actually relieve the bearish sentiment.
Yeah, because 2000 is just this massive psychological barrier. I mean, humans love round numbers. Until Ethereum breaks and stays above $2,000, investors are just going to take quick profits every time it gets close.
Which keeps the price suppressed. So if the heavyweights are stuck under these ceilings, the smaller altcoins must be walking a complete tightrope.
Oh, yeah. The report explicitly warns that alts are even more vulnerable to losses right now. Look at Ripple, XRP. It's trading at 0.9979, teetering dangerously after breaking the psychological $1 support.
Wow. Dropping below $1 is huge.
It triggers genuine panic. Unless an immediate relief rally happens early this week, XRP could just plummet toward a 50-cent target.
Yikes.
Yeah, it needs to rise past this 50-moving average at $1,1500 to actually change that negative sentiment.
Which, just to clarify for everyone listening, that 50-moving average smooths out the daily noise so traders can see the medium-term momentum.
Spot on.
And Solana is capped below its 50-moving average, too, trading at $75.21. A drop below $74.50 could trigger a retest of the year's lows. But here's where it gets really interesting, because Solana's chart vulnerability isn't just about market sentiment. It has a terrifying structural flaw.
You're talking about the recent routing error.
Yes. A single data center problem in Miami just cascaded all the way to Europe and Asia. It knocked nearly 30% of staked tokens completely offline.
Which is wild, because that is dangerously close to the 33.34% threshold.
Wait, what happens at that threshold?
The network completely freezes, all transactions shut down.
Oh my gosh.
You just can't separate that fundamental technological vulnerability from the limited upside we're seeing on the charts. Buyers simply don't want to step in when the infrastructure itself looks that shaky.
So we have this deeply precarious market, sensitive to geopolitical tensions and structural flaws. Is there any lifeline here? What should the listener watch this week?
Watch gold. Historically, rising gold prices help crypto gear up momentum. As tensions push traditional investors toward gold as a safe haven, some of that capital eventually bleeds over into crypto as well.
Okay, so a rising tide in gold might lift the crypto boats.
That's a great metric to track. But as you navigate the charts this week, I want you to chew on this. If a single data center glitch in Miami can push a major global network like Solana to the absolute brink of shutting down entirely, how truly decentralized is the infrastructure propping up our digital future?